Welcome back to Connected Farmer, your place to keep it up to date with the latest trends in agriculture and livestock. And now we have again our frequent guest, Mike Zuzolo. He got it right last week when he was talking about the ethanol and the energy crisis affecting agriculture. What can you add this week about this crisis? Mike, how are you?
Nice to be with you again, Luis. Yes, don't expect me to be right very often.
Okay.
I think what we're dealing with is still going to be very energy-centric and very energy-related. I felt as though this past week, by the crude oil prices going negative, over $40 a barrel, and the hog market hitting its lowest level in about 12 years as well, almost 15 years. In fact, you had both of these feeling as though in the trade the supply was overwhelming and the demand was dropping sharply. Both of those things are correct, but I think also both of those things are being factored in adequately now. And the recovery in both of those two commodities I felt was very important by the time we closed out this week. I would call the hog market and the crude oil market are commodity canaries in the coal mine, meaning they're going to be our leaders, I believe, Luis. And I think that because we are losing processing capacity and backing up supplies in the hog and cattle markets, but especially the hog market. And we're similarly, obviously, backing up crude oil supplies with all the tankers on the ocean and around the United States major ports. So these two commodities do have very much in common. I don't think the crude oil should have gone negative. I don't think it should have gone negative nearly as much as it did, let alone go negative. But that's in the rear view mirror, as we like to say. And that's just something we're going to have to contend with if the COVID disease and pandemic doesn't break and give us an ability to restart the global economy.
Yes, and how exactly the oil prices affected farmers? How much are they paying for diesel in your region right now?
This is the disconnect again, kind of like the pork price at the grocery store or the hamburger price at the grocery store. You know, our 81% ground beef price in grocery stores is now $2.76 a pound. That's a brand new 10 plus year high. Pork prices are very high as well. The ham prices recovered this week substantially. The cutout for the pork is back above $50. It's similar in the energy markets. I had a client from Indiana call me the day that the market in crude oil was going negative and said that his diesel fuel dealer would give him 4 cents a gallon better than what he could have gotten last week. So we're still running an average gasoline price in the United States of around anywhere from $1.40 to $1.45 the last time I checked. So we're not seeing the transmission of prices so that we can increase consumption. So the economics are not working right now. And that's probably the most disappointing feature and the most serious feature of this pandemic. We are cutting the supply chains in exactly the wrong place so that we are hurting the producer the most and we're hurting the consumer the most.
And are you hearing any concern about getting the inputs to the farms?
No. In fact, I would say to you this past week, we have made substantial progress. And in fact, I was doing some calculations before we talked based upon clients all around the country and where I think they're probably going to be in corn and bean planting. It's been very aggressive. Our soil temperatures in a big part of the country have been able to get above 50 degrees Fahrenheit. That's kind of the magic number to get planted. So I think corn plantings will probably be between 15 and 20% come Monday's USDA report. Bean plantings probably between 8 and 12%, if I had to guess, Luis. Now, after this, I do think we're going to slow dramatically because there is a lot of colder, wetter weather patterns coming for the last week of April, all the way into about the 10th of May on the most recent model runs. And so I do think we'll slow down that pace substantially this next week. But Monday's numbers will probably show a significant advance.
So do you think that the crop is going well right now?
It is going well right now. I am no farmer. I have worked on farms before, but I'm no farmer. But I am concerned that we are putting the crop in with soil temperatures a little bit on the cold side. And if we would turn cold and wet, I would be concerned about corn germinating. And that would be something to be watching in the later part of May. But you know, one of the things that I think is really important, and it's nice that you and I can have this dialogue together, because I think the listener out there is going to really need it, because I am hearing the scientists up here, when they talk about COVID-19, they're starting to talk about the North American areas, Northern Hemisphere areas going into summer and Southern Hemisphere areas going into fall. And they're very interested and curious to see if this pandemic, if this COVID-19 is like a normal flu where it dissipates and drops as the summer comes on in the Northern Hemisphere, but actually worsens in the Southern Hemisphere for Brazil and Argentina. And I know two very renowned doctors that I've been listening to are watching Brazil and Argentina specifically for increased outbreaks as you go into the winter time in your area.
Yes. I think this pandemic is having a very different situation in different places. Italy is the clear example that it had more deaths, but other places had a lot less deaths, like it is happening in South America right now.
Yes, and I think this is where the processing and the packing industry and the export markets at the ports will be very interesting to watch, and it could play some pretty significant havoc and move our prices dramatically in each area of each hemisphere. And it will be very interesting to see between that and the fact that we saw yet another record low in the Brazilian real this past week, something you and I talked about last week. There is no letting up in the weakness of the real. And I think we're probably at a point, and I would be eager to hear your view as well, but I think what I'm hearing is that the producers in Brazil especially are oversold enough and production has dropped enough, and they're worried about inflation enough that expected producer selling at this point is probably going to drop pretty rapidly. Does that sound good to you or right to you?
Yes, because this crop was sold beforehand, so there is not a lot of volume to sell in the coming months. And yet Brazil is seeing now some political disruption. Today, a minister renounced from the Bolsonaro administration, so perhaps there will be more devaluation of Brazil's real.
This reminds me a lot of 2001 when Argentina defaulted, and that really spurred another round, a brand new, fresh round of dollar safe haven buying in an already high dollar environment. And so this, again, I'm doing a special report right now on the pandemic and the commodity markets and the food value chain. And all roads really do lead to the idea that if we can't get this pandemic under control, it's going to do some significant damage that is going to be very difficult to unwrap or unwind. And one of those may be another leg up in the US dollar going forward here, especially if we here in the United States lose our summer driving seasonal pattern of buying a lot of gasoline and our summer grilling season. I wrote to clients this week that I thought that this could be one of the best summer grilling seasons in the last 10 years here in the United States, because we're all stuck at home and we all have grills. And so we're not going to restaurants, but we want to get outside and get out of the house. And so I think the demand could be extremely strong on the grilling season, but will we have the meat at the grocery stores to be able to put that on the grill? And that's a really big issue right now.
Yeah, and now I'll ask a question that I will always ask you in all of our conversations. What are you telling farmers to do right now?
I am telling them to give this market a chance to recover more, since we did make the lows in the hogs and the crude oil this past week. If we can build upon this past week's gains, I think we could get some prices that would allow us to get some simple floors underneath us, some simple bought puts, something like that, or a generic floor underneath us, so that if the pandemic would not subside and it would worsen, and we would see the crude oil market and the hog market return back to these recent lows, we would have something underneath us in that event. That's probably the best recommendation I can think of giving right now, Luis, because I do believe that we are still losing demand, but we are probably at a price level now in the corn and soybeans and in the wheat that we're also losing supplies. You know, we have to remember that France, for instance, has seen its worst crop conditions in winter wheat since they've been keeping records, and that goes back to 2011. And so we do have these issues of supply also out there, but the market's not paying a lot of attention to that right now.
Yeah, that's a really interesting thought. This week I listened to a TED Talk, an interview with Dalio, and he said that he doesn't want anybody to panic, but he thinks that we are living a scenario compared to the Great Depression. Well, if I hear that, I get in panic.
Well, and the reason he's saying that is because we here in the United States are running at a 26.5 million unemployment number. We're hoping that's a temporary number, but the longer the disease goes on, the more that's going to be a permanent number, and we're going to stretch it to probably 30 million unemployed. That gets us to about a 20% unemployment number. That's Great Depression levels.
Yes. So is there anything else would you like to add to our viewers?
Well, I know the South Americans are like us in the United States, where we love our beef and we love our cattle. I'm hoping that the Friday cattle on feed report and the April fat cattle or April live cattle futures going down to 81 cents is going to provide us with a low in this market, that the hogs and the crude oil found their lows first, and now the cattle hopefully have as well. So I'd be watching for that in between now and the next time we talk.
Okay. Have a great week, Mike.
Thank you so much for having me, Luis.
It's my pleasure.